Joining us for a closer look what's playing itself out in that market scene is Faheema Adia from Momentum Securities. Faheema, a pleasure. Good afternoon.
Afternoon, Alexandra. Good to be back.
Wonderful. Good to chat to you, Faheema. I'm actually keen just to get your overall thoughts on markets today. It looks like we're actually battling for some direction or for some conviction, but I'm wondering if there could be more to it.
Yes, I think it's been a relatively quiet day today on the JSE. We're still above the 80,000 point mark. And I think the market is just now looking to those comments expected to come from the Fed on whether we will see interest rate cuts come through later in the year. We did see that the data released on Friday was quite supportive for the Fed to cut rates, given that the non-farm payroll data came in, softer than expected, and unemployment rates look quite high. So that seems to be positive in terms of what we needed to see for the Fed to cut rates. We also have some inflation data coming out from the US later this week. So I think all eyes are on that at the moment.
Also interesting, I think, to see sentiments around the French political outlook starting to weigh a little bit. Quite an interesting time, a volatile time in Europe. I'm wondering if we've seen that volatility reflected in markets.
It's been quite a lot of political changes and uncertainty at the moment in general. We've also seen changes in the UK, new governments elected. So overall, yes, I think it is kind of having an impact on the markets in terms of the volatility. But I think what's really overshadowing all of that is basically, for now, what's happening in the US and whether we will see interest rate cuts from there and the overall direction that will present for global markets in general.
And that rand at, I think, 18.11 to the dollar. What do we make of that strength? I think welcomed. We're not complaining at all, but of course, keen to understand why that's the case.
Yeah, so I think that's just basically on the back of, expecting those interest rate cuts to come through in September. And given that we had the numbers on Friday that came out and were quite supportive of rate cuts to come. It just means basically that the dollar is depreciating, and that's therefore good for our rand.
Also quiet on the company news front, but I think a big one we've been watching for here, Faheema, is Nampak. I just want to get your thoughts on this. We are hearing about them possibly disposing of their Angolan and Zimbabwean operations. We know that they're in this big cleanup operation. It's taken longer than I thought to get Nampak to where it could possibly be.
Yes, yeah, we have seen now Nampak is in that process of turning itself around, Alessandro. It's taken quite some time, but it does seem they're making progress. I mean, if we look at the share price, that's up almost 100% over the past year. And like you said, they're now considering further restructure efforts to dispose of some of their African assets. So looking at disposing of the businesses in Zimbabwe, Angola, as well as Nigeria. And that mainly seems to be driven by the currency volatility in those countries that is making business operations a bit difficult there. So if we look at the Nigeria business, it seems they've already managed to find a buyer for that. So they'll be exiting that quite soon. And Nampak seems to now be focused just on the metals business and to reduce those high levels of debt that it managed to get itself into after it expanded into Africa so rapidly. So all in all, I mean, I think we are seeing some progress in terms of the turnaround and in bringing down those very high levels of debt.
Another interesting one this week is Time Bank and their global expansion plans. I think what's interesting here is that the Time Bank, of course, is trying to build the South African market, but they're also looking abroad. It's a strategy that most SA banks don't, quite carry out, Faheema, building at home and also building abroad.
Yeah, I mean, I think it's very exciting what Time Bank is doing. They've actually, they're now one of the world's fastest growing digital banks, valued at about $1 billion. So yeah, like you said, you don't often see banks focus locally and offshore. And I think it's quite good to see that they've really established a strong presence in the Philippines already. They've just entered Vietnam. They're also looking to enter Indonesia by the end of the year. And what they've said is that their long-term goal for the business is actually to list in 2028 in New York and on the JSE. And given all these ambitions, now it seems that they've now announced that the CEO, Konrad Jonker, will now move to the role of executive chair of Time Bank to just help drive the group's offshore expansion efforts.
also talk about a survey that's recently come out is speaking about consumers really being on the lookout for value. I feel it in my own pockets, and I'm sure this also, though, is important in trying to maybe even look at the counters that may benefit from this trend.
Yeah, so the survey is basically just showing, I think, what we've already suspected, that customers are looking for value. And this is basically driving spending habits at the moment. You know, they're no longer loyal to brands, given the tough position, and are now looking for retailers that can really offer good price for quality. And I think the brands that are mostly benefiting from this are those that are well positioned now to offer that. So if we look at the likes of our ShopRite, Pepkor, Mr. Price, you know, those value brands are basically where the consumers are looking to spend their money, and they've been doing quite well. It's quite a difficult trading environment. On the downside, though, I think the more expensive brands such as Woolies and Truworths are probably more likely to struggle in this type of an environment.
What are we expecting then to see a bit of a margin squeeze there? I think even for food, if I think of the likes of Tiger Brands and Lipstar, you know, premium brands in the home, are we expecting to see this as a period of a margin squeeze, Faheema?
Yes, definitely. I think we've seen probably the worst of margin squeeze come from the food retailers when inflation for food was quite high. But now that we're starting to see inflation start to come off and cool on the food side in particular, I do think that there will be some relief on the margin side, at least for those food retailers.
Another one that might be tricky for issues of margins, port bottlenecks and how they're pulling down our manufacturing sector there. We don't often, not reporting on the issues at the port as aggressively as we used to. But of course, it's very clear from those who have to interact with them, Faheema, that this is still quite a tricky place to be and still a risk for the performance of many businesses.
Yes, that's it's quite an important thing, and it's quite disappointing because the last I heard, Transnet had secured new equipment to try and improve the ports. But now we're seeing that APSA's PMI is reflecting that the port congestion is actually worsening. And they've had very significant issues still at the Durban port and at the Cape Town terminals. And actually last month, the World Bank actually rated us as the world's poorest performing ports, which is definitely not, you know, a title we want to be having. And yeah, this obviously takes its toll on retailers in terms of the delays, the extra costs incurred, and like you said, you know, the ultimate pressure on the margins and the bottom line. So it's definitely something that needs improvement, and let's hope that the new GNU will prioritize this.
Well, that's it. I'd like to move into some stock picks now, but first, maybe taking a look at counters that have found favor with your industry peers.
To me, it's remarkable that the stock is still so attractively valued. It's Mr. Price. Going at a PE of below 14 at the moment. I think if you like the SA Inc. thesis, if you like, if you think that SA Inc. stocks have underperformed and perhaps the long-term expected growth for South Africa is looking a little bit rosier given the GNU and potentially more friendly, market-friendly and economic growth-friendly policies going forward, it's a fantastic pick with a fantastic management team. One interesting catalyst which I like to mention is the SARS ruling, and one of the big external players, or two external players in the form of Shein and Temu, have essentially been sort of hurting Mr. Price specifically. I mean, Fushinis have had a lot to say about it, but the truth is they don't really compete against that market segment.
I'm going to actually stick with the blockchain theme. It's a US ETF. It's called Amplify Transformational Data Sharing ETF. They could work on the name there. And really, this is an actively managed ETF giving you exposure to listed companies that use blockchain technology. Now, we think blockchain technology is pretty transformational. It can solve real world problems in ways we haven't seen before. And I think it's largely been overshadowed by the AI mania. It's been performing really well, but maybe not at kind of NVIDIA pace. So yeah, one that we think warrants a closer look and potentially a responsible allocation.
I think we're probably past the point of maximum pain when it comes to the office portfolio. If you just look at the reversions that they're getting on these office leases that are expiring, it's not as negative as what it has been in the past. So if we start seeing interest coming back, international companies looking for space again in South Africa, you're probably going to see some uptick, some improvement coming through in the letting in that office space. I've mentioned previously around just how well the waterfront is performing. I mean, I think given where the currency is right now and how cheap South Africa is still relative to international destinations, you're probably going to see still good trade coming through out of that waterfront precinct. Retail is performing okay, and I think based on the most recent pre-close, the management team is being a bit more proactive when it comes to actually selling off the tail in the portfolio and refocusing their attention in terms of the good assets and just cleaning up the portfolio in general.
Okay.
Internationally, Gazi is performing okay. Capital and Regional, most of the pain I think is in that portfolio, and same with Global Worth as well. So we quite like Growth Point going forward.
Keen to get your thoughts on some of those. Faheema, we have Mr. Price, Growth Point, and the Amplified Transformational Data Sharing ETF.
Okay, starting at Mr. Price, so I think that just speaks to what we were just discussing, that consumers are looking for value, and I think Mr. Price is really well positioned at the moment to take advantage of this difficult environment that we're experiencing. Looking at the valuation, it is about 13.7 times on a forward PE basis, but I think there probably is some further upside there, particularly after we see some rate cuts later this year. And like the analyst mentioned, those new tax rulings that basically means that the likes of Shein and Temu we will have to pay more tax on the imports from that, will work in Mr. Price's favor and really help it maintain its competitive positioning. Then moving on to the Amplified Transformational Data Sharing ETF. Yes, I agree, it's a horrible name, but it is an important ETF, focused on listed companies with blockchain technology. So that's basically the technology that will drive crypto and Bitcoin. And, there's been some pretty strong performance in that ETF since its inception. Heading into the future, crypto is definitely here to stay. So I think it's a good ETF to hold. And finally, Growth Point, looking at the recent results, it looked pretty solid, and it's trading, like the analyst said, at an attractive dividend yield of about 10%. So what's good to see is they have managed to improve the vacancies in the office portfolio. Rental reversions have showed some improvement, and they've managed to dispose of some of the non-performing office portfolios in Gauteng. If we look at the V&A waterfront, that does continue to do well, and we're expecting to see further growth come from there in the future. And I also think REITs in general will just benefit once we see some interest rate cuts later this year, given that it will reduce the cost of their borrowing and help improve the bottom line there.
With that said, which council are you having this afternoon?
So my pick for today is Meta. It's my pick given its strong positioning in the digital advertising market and the significant potential that we're expecting to see come from its investments into AI. So in the short term, there is a bit of uncertainty in terms of the profits that can be generated from that. But I think if management does get this right, it can really unlock a lot of value for Meta going forward. Looking at the valuation, it's trading at a forward PE of about 24 times, which I think is reasonable for a tech company with the level of growth that is expected to come from Meta. And if we compare it to some of its peers in the Magnificent Seven, such as Apple and Microsoft, I think it's also trading at a more favorable metric, given that those are above 30 times. Also expecting that the stock could re-rate in the next few months, especially on the back of interest rate cuts.
Well, Faheema, a pleasure having you with us this afternoon. Thank you so much for taking us through today's markets watch there. That was your midday markets update with Faheema Adia from Momentum Securities.